There's a perfect storm brewing in the family housing market, and here are 3 ways that you can capitalize on rents that have spiked up to 30%. So we're continuing to see an imbalance in the market still between buyers and sellers, although now there's still low inventory, but we are seeing a lack of buyers because they've stepped back because interest rates have gone up a teeny tiny bit. But in people's minds, oh my gosh, we're at 4%, 5%, it's crazy. So anyways, the rent increases are insane though, and so the potential there in the family housing market is amazing right now. So it's definitely something the media is like, oh my gosh, rates are going up, prices are going to fall. And we saw rates go up a little, and we saw them come down. And I do believe that home prices are coming down to a more reasonable amount, and we aren't having the crazy buying frenzy that we have had, but it is still a prime market for those looking to capitalize on today's market and jump in to make some money. So here are 3 of the top ways to do that. So the first are REITs, real estate investment trusts. So these are kind of like, think of them like mutual funds, but of real estate. So you don't need to own a huge amount of real estate. You can get in with a fairly reasonable investment, and you share your ownership in a building. And sometimes this is shared amongst many. So it isn't limiting you to one market and kind of putting you at risk there. But REITs are great, and we've seen one of the large companies that invests in dozens of high-end properties, and they make their portfolio on those, is Fundrise. And they since 2014 they have averaged their annualized return at somewhere between 8 and 12%. So to put that in perspective, you're not even getting 1% from your savings account. So 8 to 12 is a really nice way to own some real estate, have it diversified, not have to deal with the actual buying and selling, the down payment, the mortgage. So it kind of gives you the hands-off approach. Again, kind of like a mutual fund for real estate. So there's that. So the next opportunity are commercial real estate properties, and those are some of my favorites. Don't always, commercial real estate, we could be talking about land, office buildings, a warehouse space. But as we're talking about family housing, there is a company called CrowdStreet that will let you invest in commercial real estate properties nationwide. They allow you to kind of go in and look at their marketplace, and you get a little bit more of a hands-on picking what you want to invest in. And the investment can start as low as $25,000. So you are owning a bit of something. And so for CrowdStreet, they've had 76 deals since 2014, and they have averaged a rate of return of 18.6%. So again, if you compare that to, say, the S&P 500, who averages an annual rate of return around 10%, that's a pretty good investment. The third opportunity is kind of the bread and butter, owning a single family home. So if you follow any of the large investment kind of podcasts or groups, like I'm a follower of Bigger Pockets, I feel, and maybe it's my perspective and and you can look at it different ways, but I feel a lot of what they target are the younger, like getting into the market individuals. And so, when you talk about house hacking, it's like, yeah, I can buy a house and rent out 3 rooms to my friends. And, you know, my husband and I, my daughter, we're not going to do that. so you kind of, may have missed that step. But, aside from the house hacking, there are definitely ways to look at slowly and kind of safely getting into the real estate market with a single family home. So secondary homes that you can Airbnb or rent out even for a season is another way to create some ownership and create some income for yourself. And then you can actually use the property as well. Or if you know of a neighborhood close by where you're at that the demand is there, if it's in a good school district, if it's easy to get to, if it has the amenities that draws people in, the amount of opportunity that is out there is great. There's individuals that, with the increase of prices as they've been over the last few years, the increase in interest rate, buying a home is just not feasible for them. And buying a home in the neighborhood that they want to, that fits their lifestyle may not be feasible, but renting is their next best option. So, make smart moves. Think about yourself as a home dweller. Where would you want to be? Where do you find value? If you have a family and like this is a family neighborhood, the school ratings are good, it feels like a safe neighborhood, there are other families out there that are looking for homes to rent. We see them every day. So if you have the ability, usually it requires a bit of a down payment, but you hold a physical asset. And for some people, that's what they want. They want to be able to drive by and say, there it is, or check on the grass or whatever. So, there's lots of different opportunities to take advantage of today's market. And it really just depends on what you have a risk threshold for, what kind of return you're looking for. Are you looking just for a long-term asset to hold on to that isn't going to require too much work, or are you looking to pump out some cash flow? So, there's a ton of different opportunities out there, like I said, and I would love to talk to you about, helping you create generational wealth for your family and beyond. So please reach out with any questions that you have, or if you just want to get together for a cup of coffee and talk real estate, talk investment, I would love to chat. Have a wonderful day.